Here are the three things that need to happen to Bitcoin price in order for there to be any hope at all for a turnaround. Are you ready? Let's get it. First, I'm going to show you the 1 hour time frame. So this is step one. I have on here the 200 EMA, which is the orange line. And if you don't know what that means or how to set it up, I will link you to my how to set up a chart just like mine at the end of this video. So you can tell very clearly when price is above it, it uses it as support, keeps going up. Once Bitcoin price falls below the orange line, it generally uses it as resistance until it pops up, use it as support, then it all happens over again. And this is just kind of like a magic line here. So right now we see Bitcoin price had been using it as support for the run up to 69K. And ever since then, once it dropped down right here, bumped its head, tried to use it as support, even kind of fooled me for a hot second. Do you think it's a coincidence that this flash crash happened exactly at the 200 EMA of the 1 hour? No, because it's exactly when it lost support. And the way price is once you lose it as support, you drop. So the drop, let's zoom in on this. I mean, this line is a big deal. Look, this drop, this flash crash happened here. Not by coincidence, right? This is a line that you be using, not like 100% for all analyses, but it should be a part of your analyses and you should look at it. So we had another little point here where it was used as support, had one little push up, couldn't get it, and most recently right here, I'll zoom into this part where I'm circling. Price used it almost perfectly. Let's really zoom in, used it perfectly as resistance. Take a look, right? And so the trick is, here's step one. If Bitcoin's going to have any form of turnaround, you need a structure similar to this. And at these moments, there was some hope of a turnaround in the market, but it's only step one. So the thing is so let's take off the RSI and only use the Stokes. I'm going to make the Stokes a little bit bigger and we'll zoom in here. So what you're looking for step one is that once Bitcoin price can get above here and come down and test it as support while the Stokes on the 1 hour all the way down, okay, all the way down, touching this bottom line, that is step one in the hope for a turnaround. There is no hope until step one is complete. If you see price get above the orange line, that is still not hope. It has to come tested as support while the Stokes are down, and then the Stokes turn back up, and then that's step one. Right? Just getting above, like here, is not step one because the Stokes had not turned around until this point. So here, at this point, and technically at this point, that was step one. Now I'm going to show you step two. I'm going to flip on the 4 hour 55 EMA, and we'll do something pretty similar right here. And I'm not in my typical setup, so I'm going to give you my spiel. Take this moment real quick to hit the like button, help out the algo, leave me a quick comment and all that stuff right now. Do it as I'm trying to set this up, please. And again, I'm in a rented house in Houston, so I don't have my my stuff set up right now. All right. Make sure you hit like, leave a comment, and also, if you're new, subscribe, make sure the bell sticks. This is time-sensitive information, and I can't deliver it to you unless you have hit that bell. All right, so here we go. So the same kind of deal is this blue line. Price, there is no hope for price to be recovering until the same concept happens, but on the 4 hour 55 EMA. So this blue line is the 55 EMA. Yes, it rides price very similarly, but what you can see here is that the Stokes right here did not touch all the way down. Right? So if you were looking at step two, at that point on the 1 hour, you had the step one checked, but you did not have step two checked. Step two was not checked until here when the Stokes went all the way down and then turned back up. So at this point, step 2 of 3 was initiated. But in order, so at that point right here, there was a decent hope. Maybe, somewhere close to 50% chance that a little, baby push to the upside was going to happen. But only 2 of 3 boxes were checked. So it's the same strategy using a different time frame, different EMA, and it helps guard you or helps you understand when you're getting better and better probabilities of an upside move. So at this point you had, so if I were on the 1 hour chart, at this point you had 1 of 3 boxes checked. At this point, particularly as price started moving back up. You had 2 of 3 boxes checked. All right, so now we're going to jump into what the third is. So now I'm going to go to the daily chart. I'm going to flip on the 10 and 21 EMAs. And again, if you don't know how to do this stuff, I'll link you to a video. It's a trading view tutorial video, essentially. So what you need to happen is you need to see a full-on cross of these 2 EMAs. And you can see here during this little up move, you never got it. So even though step 1 and 2 were checked somewhere in this area, you knew that step 3 was not. So therefore, you're still on your guard because the red never went above the yellow, right? And so you don't have a statistical edge. And the same thing happened back here. You see that? They never crossed. Only 2 of 3 boxes were checked over here during this fake out back in mid-September before it continued to drop to about 40K and then recovered. So you had a little bit of hope to the upside back here, but step 3 was not initiated. And so when step 3 is initiated, that still does not mean it's 100% chance, but rather it does mean you have a hell of a lot stronger chance. For example, there are fake outs. So this Wyckoff pattern, which was obviously, I think everybody knows at this point, back in April, May, this was a straight up price manipulation on the whales and institutions part. Don't really know who was doing it, but it was a coordinated group, which seems obvious at this point. So price was raised strong enough just to get this cross, and then the fake out happens. So fake outs can happen. It does not guarantee that the market will continue. So it's not like a perfect 100% deal. However, it does give you an edge that, and this is partly why I was fooled. Right, price undid this bearish cross here. So see how the red went below, it undid it. So it undid it by crossing back above. Generally it was bouncing here and just tanked out of nowhere. Now there were other signals that you should have been looking out for a lower high, and had your guard up, which would technically be kind of the fourth step. So the fourth step would be making a higher high over 69K, but that's a long way up, right? So that would be essentially step 4 when your probabilities are extremely good, but you're missing out on a lot of price action. So using just these 3 steps, it allows you to catch moves earlier, much earlier in the move at the sacrifice of having a lower probability that it's going to continue. But I think the all 3 boxes checked with the 1 hour doing its thing, the 4 hour doing its thing, and the daily red getting above the yellow here, which is the 10 EMA getting above the 21 EMA. Those 3 combined is when you can start having more justified hopes that Bitcoin will go up and above its all-time high of 69K. But until then, until all 3 boxes are checked, you have less than a 50% chance of it even happening. So, there's a lot of noise out there on crypto YouTube, and, just folks who are bullish keep being bullish. And, week after week, they give new reasons and, this time and, this week. And, it's just not happening. And so in order for you not to get sucked up in that hype and everything, just know that, okay, once I have 3 boxes checked, then I could be at just over 50% hopeful. But even at that point, right? So let's put price back on. Even if you get all the 3 signals, right? You still don't have the 4th, because if that were to happen, Bitcoin could easily form a lower high somewhere over here around 50, let's say 53 to 58K. It could just go like this, then roll over, right? So, but with those 3 steps, you would be able to catch this move here, which would be pretty profitable, particularly if you're taking profits around that area. So, So that's why step 4 of breaking above this area, that would be even better probabilities that the market will continue, right? But it's profitable to trade that move to the upside, and these are the 3 signals that I would be looking for. As of right now, we have none of them. Things seem to be rejected from the 1 hour 200 EMA. So I'll clean this up a little bit, take that off. And so really, being bearish until step 1 is complete is the right way to go. And even after step 1 is complete, with the price getting back above this line, you're still technically more bearish bias than anything. Step 2, complete with the 4 hour. Yeah, you can, maybe think that there's a chance there, but right now it's definitely a bearish mindset, at least in the mid and short-term time frames. Now, macro, if you're thinking yearly as an investment standpoint, sure, be bullish on Bitcoin, but if you're thinking with a 1 month mentality, well, that 1 month mentality should be pretty bearish right now, or particularly the smaller you go. Even a 1 week mentality should be pretty bearish. It's not looking very hot. It just used this as resistance, which means it's probably going to give it several resistance points until it can get it back above, right? So kind of looking at this 1 hour chart, how many times, if you go back in time, once it crosses below and uses it as resistance, so this would be our checkpoint for that, right? You typically have multiple times it bumps its head on that orange line. It doesn't just bump its head once, then recover. That's just not how it works, right? And it just had its checkpoint. It has a new checkpoint because it used it as support, and now it fell back below. It's probably going to do this several times with very, very strong statistical likelihood, right? So even back here, when it recovered rather quickly, back in October 1st, September 30th area, it dropped just like we're getting now. After getting above. So it got above just for a hot minute, fell back below, just like what just happened in a few days ago. And then it bumped its head once, bumped its head twice, then got above. So like at bare minimum, it's going to bump its head twice, most likely. So the next time, if price drops and bumps its head, well, it's probably going to bump its head and come back lower or make a higher low potentially, but it's still probably going to bump its head at least 2 times. And it's likely that it'll bump its head more than 2 times because that the time back here on October 1st, this was kind of an outlier. It typically does not recover with only bumping its head twice after it's used as support and breaks back below. Like this is a weird case. It's kind of an exception to the rule. It's usually much more times that it bumps its head. Let's just go back in time. I mean, so this is Wyckoff. Let's not count that. So all this choppy area, bumped its head twice, then recovered, right? Bumped its head twice, then recovered. So during Wyckoff, it did that. However, if you go back farther in time, I mean, bumped its head once, kind of recovered, bumped its head 3 times, 4 times. So it got up on the 5th try, essentially. And that is way more typical. So this all was the bull run. So now we got to go even back farther in time just to see more reiterations. But I mean, 2 times is kind of like the minimum it takes. So the drop back in, so this was coronavirus drop. You can see before it really dropped, it went below, bumped its head once, twice, 3 times, got above, and then tanked, right? So at least 3 times, and then it got above, but it still failed because it only bumped its head 3 times. So I would be looking for 3 or 4 bumps of its head on this line. So this is back in October 2019. It got below, bumped its head once, twice, 3 times, almost 4 times, and then got above like on the 5th try, but it had 4 drives down, bumping its head multiple times on this line, right? So let's do one more case here just so you can see how price moves. Once it's below here, so I guess I can't go back any farther, but from the, I guess I can. So from this previous drop, it went below, bumped its head once, twice, 3 times, dropped again, another one, got above, dropped again, another one, got above, dropped again. So even when you get above, that's only step 1. So so this case here, so this is why you shouldn't be too bullish just with step 1, because step 1 was completed here. Step 1 was completed here, but it still dropped each time, right? Step 1 was completed here too. That's why you're looking for step 2 and step 3 in order to have, a more bullish price. So, I mean, just look at all these reiterations. Price went below, bumped its head once, bumped its head twice, dropped more, bumped its head 3 times, 4 times, 5 times. On the 6th try, got above. Bumped its head once, twice, 3 times, got above on the 4th try. See that? So it's only bumped its head just once now. So we're looking for, bare minimum 2, but more like, 3 or 4 times. So it looks like this drive, down is just getting started. And, within my macro box, it looks like the, 42K land and a wick below is going to be hit. And my target from my previous video is the 2-day 200 EMA, and it's probably going to hit that line. And so as it's on it, so I'm on the 2-day chart now with the 2, so that orange line's 200 EMA. What I'm looking for is, it could just really drop down there without bumping its head, but on its journey down, if you were to zoom into here with the 1-hour chart, the 1 hour is going to bump its head, bump its head, bump its head. You're going to hit this line if you flip back to the 2-day 200 chart with the 200 EMA on, and so you might bump its head 2 to 3 times on the way back, and then after it hits this, it might have a chance to get back above, in which step 1, you'll have 1 box of 3 check, but that's probably what we're looking forward to, and on the journey down here, to this zone that it's probably going to hit, using the 1-hour chart to see it bump its head would probably be a good way to be viewing this market. And so let me flip to a bigger screen here. So if you wanted to check out how to set up a chart just like mine with EMAs and everything, go ahead and check out this video popping up right here. And if you want more detailed explanation on why the 42K or 41,800 level is going to be hit, watch my most recent video. You can click this video right here. And if you're new to my channel, go ahead and subscribe, hit the circle right here, and we'll see you next time. Happy New Year. Stay safe.